You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 1st of October, 2018. Welcome, October. Remember what happens in October. All market crashes have occurred. Hopefully, that won't be happening this October, but always remember that about October. Now, we have some great trainings for you at the end of this special broadcast. We have a great training on the weekly worksheet. Remember, those weekly and daily and trade worksheets are all available in the show notes. You'll see links to PDFs. You can print them out on your own. We also have a great training on vertical crossovers. Remember how important weekly vertical crossovers are, along with the 2-day vertical crossovers. You can start understanding those better. Also, a great training on trends. And then lastly, we have a video on how to buy our book and what it's all about. And again, appreciate everyone who's purchased the book in the past. Now remember, if you're listening to us for the first time and you're not already a subscriber, you need to be one. Why? Because we're going to be releasing over the weekend. We're going to be sending out the quarterly chart review. Yes, at the end of September, what happens? We have a new quarterly chart. And you look at the magic of the quarterly chart, it showed you going back 20 plus years how to protect yourself, when to get into the market as it went up, when to get out of the market when it crashed in 2008, when to get back in at the end of 2010 for the run-up, the Trump effect, and where the market currently is and where it may be going. Now again, this is training. We are not a stock calling service, but this is training you have got to have. Okay, and you can have it for free if you are a subscriber to chartingwealth.com. Go to chartingwealth.com, sign up for free, put in your email address and your name, and you'll receive this special training. Let's jump into the charts today. We see at the end of the week, stocks and bonds down, gold up, and we see that the S&P 500 has finished the week with a red spinning top. Indecision tending down. Price movement is just hugging right there on the weekly trend line. Derivative oscillator heading down. Price percent oscillator losing energy. Don't have a crossover. We see that the 2-day chart continues to trend down, going into a third candle, first day of this latest 2-day candle. But again, down price movement hasn't crossed below the weekly trend line, but is moving down. We look at that 4-hour chart. What does it tell us? Sideways slide, again, down in the morning, up a little bit in the afternoon. Derivative oscillators losing energy, but that price percent oscillator is heading down, waiting for things to shake out. Is this market going to roll over? It might. We shall wait and see what we shall see. Let's go to our second stock chart. That is another index. It's the Qs, the NASDAQ 100. We see that we had a weekly vertical crossover at the end of the prior week, but it went up again. We have a green spinning top, means indecision tending up. However, it's not crossed over going up, almost laminated. The blue is still below the red. That's the price percent oscillator. We still have the weekly and the 2-day in confirmed down moves, down for the day 0.02%, just barely. We see that the price percent oscillator is negative and the derivative oscillator is negative. We look at the 2-day chart. We can see over the last 3 days, so one full candle, one half 2-day candle, so 3 days, we see some up movement. Hasn't crossed over going up yet, getting awfully close. Derivative oscillators lost a lot of energy going down, so we'll continue to watch and see what happens. We've not jumped into this trade yet because it's not given us a jumping in point. What do we see, however, when we look at the 4-hour chart? Again, we see a sideways slide, a real cooling off of up movement over the last day on Friday. So we'll watch and see how the week starts off. Remember, if we see a drop over and the 4-hour chart crossing over going down, as long as the 2-day and the weekly are still in positive, and well, they're still positive for down moves, they're still negative, then of course we will jump in for sure and ride that pony on an inverse move. Okay, back to the weekly chart. We go to bonds down 0.26%. That weekly vertical crossover working quite well as things continue to move down. We're going into our 4th week of down movement. just completed our third week of down movement since we had that crossover. Derivative oscillator gaining momentum, price percent oscillator heading down. That 2-day chart is pretty much gone flat, even with the down movement of 0.26% on Friday. And of course, this is the first day of the latest 2-day candle. This is a Heikin Ashi candlestick. It checks average pace. If you're used to candles, it's different from your typical one. Take our special training at the website under Heikin Ashi candlesticks, Heikenashi. 2 words, means average pace in Japanese, very helpful. Derivative oscillator losing downward momentum. Price percent oscillator still heading down a little bit, but pretty much flat. We go from the 2-day to the 4-hour. What does that tell us? Well, we saw an up movement in the morning and then a doji in the afternoon, means indecision. About flat on the derivative oscillator. Price percent oscillator still going up, not at the same strong angle. Remember, we pulled out of this simply because we did not want to keep moving with it as it passed through the 2-day trend line. However, all that being said, we still have a confirmed down move on both our weekly chart and on our 2-day chart. So we'll continue to keep an eye and see what we see. And if that 4-hour chart rotates back over going down, of course, we would jump back in because that movement is continuing. But we want to take all the gains that we can take, and that 4-hour chart helps us jumping in and jumping out. Now, lastly, we go to gold. Gold up for the day, 0.63%. We're hoping gold is bottoming out. We see for the week a red spinning top, indecision tending down, price percent oscillator heading up just a little, derivative oscillator continuing to lose downward momentum. Looks like it's about to flip over, and we would like that because we would like to ride gold up. The 2-day chart, again, has pulled through and sustained moves below the 2-day trend line, but the derivative oscillator is still positive. Price percent oscillator is positive. We'll just see where gold is going, if it's going to move up. That 4-hour chart, we do see a day of up movement, so maybe that bottom is coming and we'll see that baby flip over and move up starting on the 4-hour chart. Then perhaps the 2-day continues up, and then perhaps that weekly will cross over. We shall wait and see. Hope springs eternal. And again, remember, we're not stock forecasters. We are trend followers. God bless, my friends. All the best. Buy our book. Help us out here as we try to monetize this channel a little bit. We spend a lot of time and energy giving it all away free to you, my friends. Thank you so much. Hope you have a wonderful weekend and a great trading week. Let us hear from you. CW1 at chartingwealth.com. That's chartingwealth1 at gmail.com. I don't know where I came up with that one. Thanks, my friends. God bless. All the best from the whole team here.